Hello, our beloved learners. It is teacher Shoppi Eria from Muna Education Services. I welcome you all to our lesson today. In today's lesson, I'm going to be teaching the preparation of a two-column cash book. Preparation of a two-column cash book. In my previous videos, I taught about preparation of a single-column cash book, and I discussed all contents, a format, and a worked out example of a single column cash book. Now, in today's lesson, I'm going to be teaching you preparation of a two-column cash book. Now, a two-column cash book is one of the subsidiary books, and it works in the single entry system. A transaction is posted once. Now, a cash book or a two-column cash book is an accounting book used to record all cash receipts and cash payments for the business. Cash receipts are values incoming and are entered in the date side. Now, in the previous lesson, in the single column cash book, I told you that all transactions that are going to be bringing in money into the business are recorded on the date side. It is also called receiver side, and it is the left hand side of the account or the cash book. So all transactions, they are also called cash receipts, are recorded on the date side. It's the same thing in the two-column cash book also. Then all transactions, they are also called cash payments. All transactions that draw out money into the business, like that make the business spend out money, are entered in the credit side. It is also called the giver side of the cash book, and it is the right hand side of the cash book. Now, the difference between a two-column cash book and a single column cash book is that on the amount section, I'm going to share with you the format. This is the format of a two-column cash book. Now, format of a two-column cash book. Now, remember that in the single column cash book, we only had, on the date side, we had only date, details, the folio, and here we had amount. But a two-column cash book, the amount section is divided into two columns. The cash book, the cash column, and the bank column. So a two-column cash book tracks transactions or money in cash and that has been received in bank. Let's say workers were paid workers salaries by check, meaning they paid the money to workers, but using the bank. So such a transaction is posted in the credit side on the bank account. But in a single column cash book, money was not divided whether cash or bank. So a two-column cash book divides the money, the cash and the bank. So this is our format of a two-column cash book. This is a two-column cash book. I'm discussing the details of the two-column cash book, and then in my next lesson, I'm going to give you a worked out example on how we prepare a two-column cash book. Okay, now in a two-column cash book, we have what you call quota entries. In the preparation of a two-column cash book, we have what we call quota entries. Let me share this before I teach you, or before I bring a worked out example on that. Now, in the preparation of a two-column cash book, we have what we call quota entries. Now, quota entries, these are unique entries which records transfers of funds between the cash and the bank, of the same business. Now, quota entries are those transfers between the cash and the bank, like the bank spends money, let's say bank withdraws money, or the cash is banked, cash is withdrawn. Those are called quota entries. Now, examples of quota entries in two-column cash book or three-column cash book is depositing cash into the bank. If you find any transaction and it is reading maybe cash was deposited into the bank, that one is a quota entry, meaning this transaction is posted twice. And remember that if you deposit money into the bank, meaning there are two accounts, it is cash and bank. So if you deposit the cash into the bank, meaning cash is losing, meaning you're going to credit the cash and debit the bank, meaning you're going to record this 2 times. Then withdraw cash from the bank. So here you're withdrawing cash from the bank. So there are two accounts. If you withdraw cash from the bank, meaning the bank is losing and the cash is gaining. So here you debt the bank and you credit the cash. You withdraw cash from the bank, meaning cash is increasing, so you debt it, and then the bank is losing the cash, so you credit it. So you record this twice. Then there is a notation here. Notation. These entries are recorded on both debit and credit side of the cash book simultaneously. Like I've told you here, if you find a transaction that deposited cash into the bank, that transaction is recorded twice. One, if it is depositing cash into the bank, meaning the bank is gaining money. So you're going to debit the bank and credit the cash. This is the meaning of this notation. Then withdraw cash from the bank. If you withdraw cash from the bank, meaning the bank account is losing cash and the cash account is gaining money from the bank. So it is recorded twice it is completed in the cash book. It is like a double entry, but it is in cash books. Then we have a note also here. Entries are denoted letter C for quota in the ledger folio column to indicate that there is no further posting into the general ledger required. So after you noting out that this is let's say it is a quota entry, when you're noting, let's say we have said depositing cash into the bank, when you're recording that, you have to put a C on the folio section. You put a C to show that it was a quota entry and there is no further posting it in the ledger. So that is why we denote it by a quota entry. So that is quota entries. Then there is a note here also. During the balancing of a cash book, the cash column can only have debt or nil balances, since the business cannot spend more physical cash than it possesses. Now, during the balancing of a cash book, remember that when you're balancing a cash book, in my next episode, in the worked out example, I'm going to show you how we balance a cash book. But remember that during the balancing of a cash book, the cash column can only have debt or nil balance, since the business cannot spend more physical cash than it possesses. Meaning we don't have any credit balance in the cash book. Meaning we can't, if you have 1 million, you can't spend more than 1 million if you have it in cash. But we spend only the money we have. We spend either less or what we have. So we have debt balances, not credit balances on the cash book. We only have debt balances on the cash column in any cash book. Then, but the bank column, we have this note also, but the bank column can, however, have a credit balance which indicates it is a bank overdraft. The bank can have a credit balance because maybe you can, let's say, a bank overdraft. I've discussed the meaning of discussed the common words used in accounting, like bank overdraft. A bank overdraft just means, those who can want to certain of this word, a bank overdraft just means that extra money the bank gives you more than what is on your account. Take an example. You've purchased goods using, let's say, the bank, and you're paying by check, and the good is for, let's say, the commodity is for 5 million and you have 4 million on your account. The bank can give you a top up of 1 million, so the 1 million becomes the bank overdraft. So a bank column or the bank can have credit balances, and which indicates it was a bank overdraft. But the cash column only has debt or nil balances, because you can't spend money in cash more than what you have. You only spend what you have or less than that. Okay. Then we have also a note here also. We have a note again here. When we are preparing two-column cash book or cash books, two-column cash book, single-column cash book, and a three-column cash book, we have what should be excluded during preparation of cash books. Now, during the setting of items for runners, there are some transactions that are always included just to test your understanding of cash books. Now, remember you are dealing with cash books from the word cash, meaning we are only dealing with cash transactions. So anything that is not to do with cash is not recorded in the cash book. Same thing in cash flow statement C. So transactions that involve credit, for example, credit sales, credit purchases are not recorded in cash book until any actual cash or bank payments are made. So in cash books, we don't record anything that is not to do with cash. So anything that is not do with cash, we don't record that in the cash books. Okay, then we have even like drawings for personal use, as it is in cash flow statements. We don't record any transaction that doesn't have or involve cash in the cash books. In my next lesson, I'm going to discuss a worked out example on the preparation of a 2-column cash book. This is the quota entry, and what should not be posted in the cash books. So that is our lesson for now. In my subscribe for my next lesson. I'm going to be discussing the worked out example of a 2-column cash book. I advise learners to go and download content and learning material from our website, Una Education Services, and also reach out on our different media platforms. Thank you for listening. Let's meet in the next lesson. Thank you.